Have you ever completed a project, delivered great work, received positive feedback from the client, and then found yourself waiting weeks or even months for payment? In this video, we are sharing 7 steps how to get paid fast and fix cash flow problems in business finance. Step 1. Start with clear payment rules. One of the biggest reasons clients pay late is because expectations were never clearly established in the beginning. Many business owners focus heavily on discussing the project's scope, deadlines, and deliverables, but spend very little time discussing how and when payment will happen. From the very first conversation, payment expectations should be crystal clear. Every proposal, contract, and invoice should clearly explain payment terms. Never assume the client understands your expectations automatically. For example, instead of using long payment windows, consider shorter payment terms whenever possible. The longer you give someone to pay, the longer it usually takes for money to arrive. Shorter payment periods encourage faster action and improve your cash flow. Another powerful strategy is requesting an upfront deposit before work begins. Think about it from a business perspective. If a client is serious about the project, they should be willing to invest something before work starts. Deposits help cover initial expenses and reduce financial risk. There is also another benefit. Clients who make an upfront payment often become more committed to the project because they already have financial involvement. One small but valuable habit is identifying the person responsible for payments. Many project managers approve work, but they are not the people processing invoices. Ask for the contact information of the finance or accounts payable department early in the relationship. This simple step can save countless emails and unnecessary delays later. Clear payment rules create clarity, professionalism, and accountability. They eliminate misunderstandings and establish a strong foundation for future transactions. Step 2. Break large projects into smaller payments. Many businesses accidentally create cash flow problems by waiting until the entire project is finished before sending an invoice. Imagine spending several months working on a large project. During that period, you are investing time, effort, resources, software subscriptions, employee salaries, and operating expenses. If payment only arrives after final completion, your business carries all the financial pressure. A better solution is milestone billing. Instead of waiting until the end, divide the project into several stages. Each stage has its own deliverable and payment schedule. When one stage is completed, an invoice is sent before moving to the next phase. This approach creates a steady flow of income throughout the project. It also reduces the risk associated with long-term contracts because you are receiving payments as progress is made. For businesses providing ongoing services, monthly retainers can be even more effective. A retainer arrangement creates predictable revenue and allows both parties to plan more effectively. Clients know exactly what they are paying each month, and your business benefits from reliable cash flow. Milestone payments also improve project discipline. Clients become more engaged because payments are connected to progress. Both parties stay focused on achieving agreed objectives rather than allowing projects to drift endlessly. When payments are linked to progress rather than completion, cash flow becomes healthier and significantly more predictable. Step 3. Send invoices immediately. A surprisingly common mistake among business owners is delaying the invoice itself. Many people complete work and then wait several days or even weeks before creating the invoice. Every day you delay invoicing is another day added to your payment timeline. The best practice is simple. The moment a milestone is completed or a billing period ends, send the invoice immediately. Think about it this way. If your payment terms begin when the invoice is issued, delaying the invoice automatically delays payment. Fast invoicing accelerates the entire payment process. Professional invoicing software can help create consistent and accurate invoices. Well-designed invoices look organized, trustworthy, and easy to understand. They also reduce the chance of accounting departments rejecting them because of missing information. Always include clear descriptions of services provided, dates, quantities, rates, payment instructions, and invoice numbers. Detailed invoices reduce confusion and make approvals easier. Another useful technique is reminding clients of the value they received. If you provided extra support, additional advice, or complimentary services, mention it professionally. Small reminders of added value reinforce positive client relationships and can encourage faster payment behavior. Remember, your invoice is not just a request for money. It is a professional document that communicates the value you delivered. Step 4. Make paying you easy. Many clients do not delay payment because they lack money. They delay payment because the process feels inconvenient. People naturally postpone tasks that require effort. If your payment process involves multiple steps, complicated instructions, or limited payment options, delays become more likely. Your goal should be to remove as much friction as possible. Offer multiple payment methods whenever appropriate. Some clients prefer bank transfers. Others prefer credit cards. Some businesses prefer automated payment systems. Flexibility allows clients to choose the option that works best for them. Digital payment links can be especially powerful. Instead of forcing clients to manually enter banking information, a payment link allows them to complete the transaction in minutes. Convenience matters more than most business owners realize. Every extra step creates an opportunity for procrastination. Imagine receiving an invoice that requires logging into a banking portal, entering account details, confirming payment references, and manually processing the transfer. Now compare that to clicking a single payment button. The second option is far more likely to be completed immediately. The easier you make payment, the less likely clients are to delay it. Step 5. Automate payment reminders. Even good clients sometimes forget to pay. Invoices get buried in crowded inboxes. Managers become busy. Finance departments handle hundreds of transactions every month. Sometimes the delay is simply the result of oversight rather than intention. This is why automated reminders are so powerful. Rather than relying on memory, create a system that automatically follows up with clients. A reminder can be sent before the due date, another on the due date itself, and additional reminders if payment becomes overdue. The key is consistency. When reminders happen automatically, every client receives the same professional treatment. No invoice gets forgotten, no follow-up gets missed. The tone of these reminders should remain polite and professional. Most clients appreciate helpful reminders because they prevent unnecessary problems. Automation also saves enormous amounts of time. Instead of manually tracking payment dates and sending emails, your software handles the process for you. Many businesses discover that a significant percentage of late payments disappear simply because reminders are sent consistently. Clients often pay as soon as they receive the reminder. A reliable reminder system transforms collections from a stressful activity into a predictable business process. Step 6. Communicate directly. When payments become overdue, sometimes reminders are not enough. If a payment remains overdue, it is important to communicate directly rather than relying solely on email. A simple phone call can often solve problems much faster than a long email chain. Contact the accounts payable department and politely ask whether there is an issue preventing payment. Perhaps additional paperwork is needed. Maybe the invoice was sent to the wrong department. Sometimes a small administrative error is the only obstacle. Approach the conversation professionally and calmly. Your objective is to solve the problem, not create conflict. If necessary, involve your primary client contact as well. Explain the situation clearly and ask for assistance in moving the payment process forward. At the same time, establish professional boundaries. One of the biggest mistakes businesses make is continuing to provide unlimited work despite significant overdue balances. This weakens your position and encourages poor payment habits. When an invoice becomes seriously overdue, it may be necessary to pause future work until payment is received. This is not about being difficult. It is about protecting the financial health of your business. Strong businesses respect their clients, but they also respect their own financial boundaries. Step 7. Use automation to take control of cash flow. The ultimate goal is creating a system where payments happen with minimal effort. Modern payment technology allows businesses to automate significant portions of the collection process. Automated billing systems, recurring payment arrangements, and direct debit solutions can dramatically reduce delays. When payments are automated, clients no longer need to remember due dates or manually initiate transactions. The process becomes predictable and reliable. Automation also reduces administrative workload. Instead of spending hours every month managing invoices and chasing payments, you can focus on serving clients, improving operations, and growing revenue. Perhaps most importantly, automation improves cash flow forecasting. Predictable payment schedules make it easier to plan investments, manage expenses, and make strategic business decisions. The businesses that scale successfully are often the ones that remove unnecessary manual work from their financial systems. Getting paid on time is not about chasing clients harder. It is about creating a business system that encourages prompt payment from the beginning. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.